Hi, this is JR Trader with videos about how to day trade using MT Predictor for NinjaTrader. Now, I want you to remember that all examples in these videos should be considered as hypothetical. No trades were taken. They're shown for illustration and purposes only. There is a risk of losing or loss in trading and investing. All trade decisions are at your own sole responsibility. Losses can and will occur, and past performances do not guarantee your future results. So with that said, let's just jump into the video. Okay traders, so in this video I want to show you how I use MT Predictor to capture a scalp trade. Now please keep in mind I didn't actually take this trade today because it's during the lunch hour, and one of my trading rules according to my plan is I don't trade during the lunch hour. So plain and simple, but this did unfold, and it looks kind of bumpy, but there's actually some money to be made right here, and I just wanted to kind of go back and show you the steps that you could have taken in this situation to exploit or take advantage of this trade setup right here that occurred. So this is using the MT Predictor software, of course, and what I've got here is just my regular MT Predictor analysis on the chart. We have our trend indicator down here in the lower pane, and then right below that is a volume indicator that we like to use. Okay, so that's what you got on the chart. These red bars are bearish bars, the cyan bars are bullish bars, and the white bars, or the silver, I guess they are neutral bars. Okay, so what happened here was you can see over here on this leg down that we broke market structure over here. We broke this structure, so that is bearish. So I also know that because of this indicator, I'm looking at a downtrend. It's clearly going down. There's some big volume bars there that basically result in lower prices, and the indicator's moving down. It's going through this strength band right here that you can see, where that little histogram stick pokes through this silver band. That's the strength band, so we know that there's strength in the market. Market's moving down. Clearly I'm in a downtrend. If you look over on the higher time frame chart, you can see what we're in a downtrend over there as well. All right, so we know the trend is down. We know we're looking for short setups. So here's how I use MT Predictor to narrow down where I want to enter the market. I want to try to get ahead of either a wave 2 or a wave B, or I want to get in at the end of a wave 2 or a wave B, because wave 3 is always going to be the biggest and most powerful in the Elliott wave sequence. So I want to get in at the beginning of wave 3, which is the end of wave 2, or B. Sometimes it can be a B in a ABC correction. At any rate, just depends on the degree. At any rate, here's how I would do it. So if I'm looking for wave 2, this is wave 1 in the new trend. We already know that. New trend took out the structure over here, wave 1. So what I want to do is find the end of wave 2. So I'm simply going to do what's called I'm looking for an up. I'm looking for an up move right now. I've got down move as number 1. Okay, so I'm looking for wave number 2, which is going to be up. So what I'm going to need to do is go up here to the top, right click on my mouse, and choose manual WPT up, because I'm looking for an up, the end of wave 2, which is going to be up. So I'll go over here and I choose wave 2 or B. Down here on the left hand side in the middle, it's going to say select beginning of wave 1 bar. Okay, well that's right here. And then it switches and it says the end of the end of wave 1. We click there, and that gives me wave 2 or wave B. And as you can see, price pulled up into this segment, this rectangle that you see here, and then steeply reversed and has continued to move on down. A couple of different ways you could have gotten in there. The most aggressive way is to jump out in front of the train and fade this market and put a sell limit right there on the bottom of the zone. That's the most aggressive way. And your stop could be right here above the high, because we know that's an aggressive trade, but you would have made money anyway. That wouldn't probably be my favorite way to get in though. And then method number 2 is, once we see this red bar form, we've got our signal here too, and I forgot to mention that. You have your TS1 signal here that fires right in the wave 2 zone. Okay, so that's encouraging if we're trying to get short. So that's popped. Now we have the red bar. We could have either faded the zone and gotten in, or we could let the red bar close and put in a sell stop one tick below the low of the red bar. As you can see, the next bar took us in. So that would be the worst case scenario right now, is to get in off of this low, which puts you in at 85 even, and it moved on down to as low as 78.50. So depending on how you manage your trades, you could have made money on your first go round of contracts. That's what I typically do. I'm going to go in with several contracts and unload a few of them at my first profit target, and then hope for a runner to make me some more money. But I'll manage that runner, hopefully effectively. But at any rate, so that's method number 2 of getting in, is buying on the breakout or selling on the breakout of this low. Or method number 3 is, if you miss this trade over here, because this happened quickly. Between the time this bar closed, this first red bar, and this bar opened, that happened really quickly, and it was hard to get in on the breakout. That's just really what happened on the chart. However, this signal still held up, right? Because a couple things happened here. We took out this low on this bar. We took out this low. So we're back in a bearish mode. All right. We know we're still looking for sells. And look what happened. See this space right here between where this bar closed and the next bar opened? That little gap right there is a liquidity void. So we had the liquidity void that took place after the TS1, right? While we were in a downtrend, because we took out market structure over here, and underneath the wave 2 or B price projections. So that gave you 3 ways to get short here. The most price efficient way is at 87.25. On the first leg it went down to 78.50, so good money there. It's back down in that area right now. So even if you got scared out here a little bit, it didn't go too far against you. Well, actually you were in right there. I apologize. It never really went against you. So depending on where you got in, that'll just determine whether or not you're still in this trade, I guess. But it did fire off. Now the next thing I want to show you is, okay, well that's great. How do we know when to get out of the trade? Well, there's a couple of different ways that you can do it. We'll go with two methods, 2 areas. So what I want to do is find out where the next level of support is going to be based on this low pivot. So I'm simply going to right click on that pivot, and I'm going to hit decision point, and it's going to put those levels in there for me. So now what happens, we want to see if the market will come down and test these levels or not. If so, there's a good chance it's going to break through there and come on down at least to this gold line, which is orange line, which is just yesterday's closing price. But we've got 2 decision points down here that we have to get through first. So you'd have to see what this trend indicator looks like when price approaches these spots on the chart. But ultimately, we're looking for price to take out this low pivot over here, which would put us in this decision point zone. So that's kind of what I'm looking for. If I was still short from the liquidity void or from the zone up here, I'd be looking at taking profit down here at these areas. So I'll come back and see what this looks like after the market has closed or a little bit later on in the day. Also, I forgot to mention these decision points that I drew right here, those are based off of this low pivot, but we also have a lower low back here, so I'm going to go ahead and delete those and switch to the lower low. So I'll just go hit clear last. It takes those off. I'm going to base that decision point off of this low. There. That's my new target. So let's see if that takes place or not. Alright, as I see it set up here on the chart, I want to look at another calculation real quick, just to show you how it works, and it just puts additional lines on your chart that you may or may not want. But I like to have areas of confluence where several different things come together. So when I see something like this, I want to go ahead and take advantage of it. And what I have is an A, B, failed C right here. So what I would now want to do is look for a projection of this wave down. So the way that I'm going to do that, I'm going to go to WPT down, and I'm going to do a wave 3. So I want to start here, here, and here. And that typical wave 3 pops up right down here inside of that decision point. So that's confluence. Now, what else? The other thing we've got going on at this level is this orange line, which I may or may not have mentioned, but that's yesterday's close. So we've got a typical wave 3 calculation. We've got the decision point maximum, and we've got yesterday's close all coming together. And again, the trade originated right up here with either a fade off of this box, the wave 2 termination, or the breakout of the low, or the retest of the liquidity void right here at the top of this bar. So those were your 3 methods of entering, and now we're looking at to see if our targets would be achieved. Again, to be completely transparent, I did not take this trade because it was during the lunch hour, and one of my trading plan rules is I don't trade during the lunch hour. I'm sitting here killing myself that I didn't, but there's times when I did break my rules, and I regretted it, and so I don't break rules as for the most part to be totally transparent again. But at any rate, this is moving down nicely, and that's how you can leverage MT Predictor to take some of these trades. Okay, so we have tested the first level, the first decision point level, typical support. And now our trend indicator is not piercing the strength band yet. So this may or may not be a move that gets us down to the typical wave 3 maximum decision point yesterday's close level. So what we would do in this situation is if we were still, the initial profit target would have already been hit in my method of trading, and so I would just be managing a runner right now. Now that we've gone out and tested this decision point, I would tighten the stop up a little bit on that runner, just to make sure that if it does pull back a lot, if it bounces out of here all of a sudden, I keep some money. I don't leave too much on the table to get taken from me. So I would tighten that up a little bit. Now, you can also see that if you're a little bit riskier, you can run your stop way up here on these ATRs. Those are there for you. That's supposed to be a safe place to run your stop, and even if that's where you had your stop on your runner, you'd still be just right at break even if it got hit. So not a terrible place to have it, but for me, my personal style, I would tighten my stop up a little bit. I'd probably have it right here off of this low, just maybe right up there halfway into that wick for now. If we go down and test the typical wave 3, I'm going to pull it all the way down to the bottom of this decision point zone. Pause the video and come back when something unfolds. Okay, if you were managing this runner, like we discussed a minute ago, like I said, I would have my stop right here about halfway into the middle of the wick on this low. So we're still a little ways from my stop, my trailing stop on the runner if I'm in this trade. The other thing that happened though is that when I last spoke, our stop would have been, our trailing stop would have been worst case scenario, even though I said mine would be tight. If you were just following the program, you could have your stop up here and it's probably not going to get hit, but it could. Well, that changed, and now the ATR has plotted to stop down here. So you could tighten that protective stop up on your runner quite a bit just by watching what this indicator does. Me, I like to run it tighter, and I use market structure to base it off of. If we get up here and pierce into these wicks, it could mean that it's going to move higher, especially as it's coming out of this decision point support zone, even though my anticipated target is still down here where there's confluence. I drew a line in, just a horizontal line here, about halfway into these wicks where I said I would run the stop on my trailer, just for visual, just so if it gets hit, you can see that it did. Again, my entry point would have been either right here on the bottom of this wave 2 or the termination of wave 2 on the bottom of the box there, either right there on the fade, right here on the break of this low, or right here in the top of this liquidity void, which was 85.75. So if 85.75, we're down to 77 right now, and already took profit. Target number one would be off the table already, and that money in your pocket. So just, an easy to follow setup here. It just worked out really nice. We started with a signal, trading signal that occurred inside of our wave 2 box, got a red bar. Everything just lined up, had a nice pullback to this liquidity void. Just a lot was going for this trade. So again, I didn't honestly take the trade because it's lunchtime and I don't trade during lunchtime. So maybe our trailing stop's about to get hit. We'll see. We did trade down into the decision point support zone, so it wouldn't be too much of a surprise if we get stopped out. You could trail your stop up here on this ATR if you wanted to. Like I said, I like to run mine a little bit tighter. Okay, and my stop on the runner would be hit. This may prove not to be anything, but that's my maximum comfort level on that trade. So the entry, my favorite entry out of the three entries, the one that I would have been most likely to take, would not have been the fade, even though it would have got me in a couple points higher. My entry would be the pullback into this liquidity zone. Because this trade, honestly, I couldn't have caught it. It happened so fast, and I wouldn't have taken it anyway because it's lunchtime. But it happened so fast, I don't know how feasible it would be to actually get in right there. These things look great in hindsight, but when you're in the trenches and everything's real and the chips are down, these little things can deceive you, right? So we started with a signal inside the box, okay, right there, and we had our liquidity void. So what I was looking for at that point was to fill this liquidity void. So my sell limit would be right here at the top at 85.75, and it gets taken in. First target would be off the table at these at this well, right where I'm trying to right where I said I would get stopped out, right here in the middle of these wicks. I like that. I like those areas. Okay, so that would be filled. Profit target number two, you could have taken it off at this support level, but I'm expecting it to come down further. But I like to run a tighter stop, so I didn't leave my stop up here where the ATRs are. I moved it down here into this wick zone. And as you can see, it's moved higher. I'd be, not as profitable right now. But at any rate, I got out, or I would be out, had I really taken this trade. So there's how it all works. Hope that helps. Okay, so you see if you held your stop up here at the ATR, you're getting close to getting popped right now. Again, mine would have been right here, the midpoint of these wicks, maybe up a tick or two, um, give or take. But that's basically how that works. Now we're not stopped out yet, but getting close, and this is on the runner. So profit's already in the bank on both the initial contracts and the runner. So that's okay. Had a pretty good profit on the first set based on this setup. I can also show you kind of how you can calculate whether or not this trade is worth taking. If you'll just right click on the red bar that comes after the signal here and just do analyze trade setup, it'll show you. Now that says short 57 contracts. This is based on how much money you have in your account. This is based on basically how much equity you have in your account. You don't have to trade 57 contracts, but that's what it's doing here. So it tells you that your entry is going to be right here off the bottom of this bar, okay, at 48.84.75. You're risking $998 if your stop is up here at 88 gets triggered. My first profit target would be 81 and a quarter. So that happened pretty quick. And then the second target, as you saw, was trailed. The runner was trailed. and that was exited at 79 and a quarter. So 84.75, that's still what, 5 points, almost 6 points, uh, if you stayed in the whole thing. And it did achieve the maximum profit target, 74.50. So if you just didn't trail your stop and you put your target right here on the minimum wave C, on the decision point confluence zone, that would have worked out for you. So there you have it. A little update as to where we are. We bottomed out off of this decision point right over here. There was also a volume spike signal there, but I didn't take that because we were still in the lunch hour, and I was just exiting still in a short trade, so that wouldn't have been a trade that I could have feasibly made. But at any rate, the entry was up in here, and then we had another entry come in on a two wave. Remember I said we want to get in at the end of twos or B's, so we had another like a B wave come in here. And it could have been a 2, I don't know, but what I wanted to do is find out where the 2 or the B ended. So what I would do is over here, I'd click on up, wave 2 or B. And so I'm going to click at the origination point and the termination point, and it puts my wave 2 or B right in this area. Now I also showed you how you could exit off of the segment B that was up here from this move down, or how you could enter, or how you could enter off the low of that bar. But at any rate, you do have a pull back into that same area, the same bar that violated or filled the liquidity void, topped out in that box. So, another really good way to get in to the trade. If you somehow missed the 3 different opportunities that were over here, there's another reason to get in there. Trade moved down. I placed my stop at the midpoint of these wicks rather than using the ATRs, and this time it would work, because if I would have stayed in, I would have got stopped out at a higher price and made less money. So that trade worked out pretty good. Now we're pulling back, and we'll see kind of where this thing terminates. Okay, so just a quick recap of how this ended up. As you can see, we had our wave 2 projection that I showed you how to draw yesterday when the market was live. We had our decision points down here that we calculated from this low pivot. Price traded right down into that zone. I was holding out, or would have been holding out, for this zone down here because I had some confluence. A few different things came together down there, but it didn't hit. So my trailing stop on my runner, my first set of contracts got out right about where this trailing stop is, right here in the middle of these wicks. My second set of contracts I was holding until we got down here. Actually, there was just one contract left the way that I trade, but there was one contract that I was holding for until it got down here. However, I don't necessarily subscribe to holding on sometimes for too long, especially since the trend indicator here, MTP trend indicator, was not poking through the strength bands when we got into this area. That's why it didn't go further. Now, I was holding out for it to go further, but it didn't. At any rate, I trailed my stop. So my stop would have been right here, basically where I got out of the first set of contracts, but in the middle of these wicks, mostly because it was the middle of the wicks. That's where I wanted my stop. We had the system drew stops up here for us. You could have used those either way. You probably would have got stopped out, but you could have used those instead of the method that I use. And this is not the method that I use 100% of the time, but I saw those wicks there, and so it's the method that I wanted to use that time. But again, your ATRs are there for you. If you don't know how to do this, you've got your ATRs, and they would have kept you still in the profit because your entry was up here at around 85.75. So you still would have made 2 3/4 points even if you got stopped out at the ATR instead of down here at 79. So that's how that materialized. That stop did get hit. That stop did get hit. Now I want to know, okay, well, how much higher is this thing going to go? So I'm simply going to right click on this top, and I'm going to hit decision point, and it pulls those in for me perfectly. Then we get a volume spike trade. If you wanted to take this trade, you could simply just right click on the right bar, hit analyze trade setup. It's going to tell you that you would get short at 85 and a quarter. For me, if I'm trading this way, my first target is going to be 82 and a quarter, so that's 3 points. S&P points, E-mini S&P points, that's 3 points. And then the second target would be down here. Well, right here. I already had it drawn in. So second target would be down here for me. But and that's also where the system put the target at 874.50. However, on a trailing stop, you would have gotten taken out somewhere, and the market just started to move sideways. So it got kind of late in the day. Whether or not you would have actually taken a trade there at 3:35 in the afternoon, that's going to be totally up to you. I just want to show you how you can use this product and how I use it to help determine where the market's going to go and when to look for the most valid trade setups. This one you can see was extremely valid, and it did have a really good risk to reward ratio, so it would have been taken. It's just that the whole trade didn't really make, unfortunately. This level is where the market ultimately closed. This orange level is where it ultimately closed for the day. So, you know, on into the early morning hours, that's been pretty much the bottom of yesterday's market as it concerns us. So I hope that helps. I'll be putting out more videos in the future, and please feel free to shoot me an email if you have any questions. My email address will be located in the description of the video. Thank you for watching. Bye.